I thought that we could move on from that.
It was a joke.
I know
You
it
never
was
laughed.
it wasn't funny.
It was funny.
Why?
I'm laughing.
Well, that's a good way to start the show. Parent laughing. Welcome to Locking It In with Deb and Pear. This is Tuesday, January 4th, 2022. And we are at the start of a brand new year. If you're a homeowner and your policy is up for renewal, you might notice a few changes.
So it looks like the trend right now in these times is for homeowners insurance to be going up in price by like 2%. Is it 2%?
On average, 4%.
4%. That's what I meant.
It's increased by 11.4% since 2017, and that's a higher rate. That's higher than the rate of inflation. It's a bit excessive. And the reason for this is largely due to climate change, especially when there are areas with a high level of natural disasters, in particular, hurricanes, wildfires. When these happen in one area, there's a huge cost just in that one area, but the cost to rebuild now with the cost of construction and materials has really caused these rates to go up, and they may continue to go up into the future. Just something to be aware of. And in fact, if you live in Colorado, your annual premiums rose an average of 21% between 2017 and 2020. And in Texas, that would have been 18%.
Yeah, the rates went up on homeowners insurance, especially in those areas where there's been a lot of disasters, which makes a lot of sense.
And I think that's specifically climate change related disasters, as opposed to earthquakes or volcanic eruptions.
There haven't been too many of the big ones of those around here.
Right. And I don't think those increase at a higher rate. However, the premiums could still go up because the cost to repair things has gone up.
Well, earthquake insurance rate hasn't gone up because it can't go up. It's already so high. It can't go any higher.
Yeah.
It's been that way for decades.
I wonder about flood insurance, because that's
That's
federal
insured by the government. It hasn't gone up that much.
Okay.
But it's expensive if you're in the heart of the flood zone.
Yeah, definitely. Something to look out for if you are in the market for a new home, or if you want to sell your current home and go to an area where your insurance might be cheaper.
Yeah, like here.
Yeah, our insurance isn't that bad. It hasn't gone up.
It went up a little bit. I increased the coverage.
Oh, right. Okay.
But not 4%, not 2%,
Not even close.
not even 1%.
Yeah, just what you would normally expect in a given year. So I don't think that our rates have been affected at all in this area. We live in Puget Sound. The 2022 market is here for housing, and I found a list written by Alyssa Wolfson. She breaks down a list of things that you can expect to see in the coming year. One is mortgage rates are going to rise. We all know that. The Fed announced that they were going to reduce measures that they had been taking. Some estimate that 30-year rates could top 4%. However, the National Association of Realtors thinks that number should average around 3.3 throughout the year and hitting 3.6 by year's end. And its chief economist, Dr. Lawrence Young, for the National Association of Realtors, he believes that the rate will increase to about 3.5%, which isn't really that bad. It's still some of the lowest rates we've had in history. And home prices will continue to rise, but at a much slower pace. It will normalize a bit, and so will inventory. It will still be low, but it will be a few.
It won't be as
It won't.
competitive.
It won't be as bad. There will be more people selling homes in the coming year. And as far as bidding wars, because of that, it's going to be a few degrees cooler, not a whole lot. Some buyers will be, of course, priced out of the market because of a slight interest rate increase. In homes that are 400,000 and less, there are more bidding wars than with other homes, because those are generally the homes that everyone wants, that are in demand, an average single family home. Now, the NAR also notes that the United States has underbuilt housing by at least 5.5 million units. In other words, we're short 5.5 million homes to support Americans, which is not a good situation and forces a lot of people to rent. Inventory is expected to grow by about 0.3% on average come 2022 through the year. We're approaching tax season. If you recently purchased a home, or if you own a home, there might be some tax deductions you haven't been aware of. In particular, if you take the standard deduction instead of itemizing. If you itemize on your tax return, what kind of tax breaks can you get? What can you write off and not pay taxes on? Interest you pay on any mortgage, 100% of that is tax deductible. And if you recently
Up
bought a
to a
home,
certain amount.
which you won't hit at the end of the year, when you first buy a home, that's pretty much nearly 100% of your payment goes to taxes and interest. So essentially 100% of your mortgage payment is tax deductible, more or less, that first few years, because your taxes, your property taxes, are also tax deductible. So if those are a couple grand a year, $3,000 a year, that's $3,000 less you have to pay income taxes on. That same goes with your home equity interest, as well as your mortgage insurance premium. If you buy a house or you refinance and you pay discount points, you can write those off. If you install accessible equipment in your home, such as medical equipment, railings, widening and doorway, you can write that off. And you can also write off some home office expenses if you work from home. The one thing you do want to be careful of if you sell is paying taxes on the capital gains. And capital gains is the amount of money you sell the house for less the amount you bought it for. So if you pay $400,000 for the house and you sell it for $500,000, your capital gains would be $100,000. If you've lived in that house for 2 out of the last 5 years, is that right?
I'm not
2
sure.
out of the last 5 years, then you don't have to pay capital gains on the first 250 or 500,000, depending on whether you file jointly or singly. If you've rented that home out, you will have to pay capital gains on that entire amount. The closing costs you can deduct, the cost to sell the home. And that is something to know, in particular, if you're a renter and you've been thinking about buying a home, because that could amount to a tax refund for you. If you're paying $2,000 a month on a mortgage that you only recently got, that's $24,000 a year, up to $24,000 that you can write off on your tax return. That's income you might have earned, and now you don't have to pay taxes on it. I would pursue this course if you haven't tried it already. And what's new this week, parent?
Interest rates keep ticking up. I see that several times a day. Interest rates are ticking up slowly, very slowly, but they're ticking up. So if you want to do something sooner, the sooner the better.
Yeah, in particular, if you're on the margin with your credit score. If the interest rate goes up a tiny bit, you could be priced out of the market depending on your situation. And thank you for listening. If you have ideas for content, let us know in the comments below. And please like and subscribe, and we will see you all next week.
Thank you.